Welcome to the launch of the State of European Mobility Startups 2022. I'm super pleased to be here with my friends Felix from Dealflow and Fabien from Google. Last year, we started this journey by launching the very first edition of the very first report series dedicated to the European mobility ecosystem. And in 2021, well, this was a record year. A record year for investments with roughly 14 billion invested in European mobility startups, but also a record year for exits with 81 billion in value and also 16 newly created unicorns. So today's question is simple. What happened in the European mobility ecosystem in 2022? Today, you'll learn everything about the funding activity, who are the VCs that invested in startups, who are the CVCs that invested in startups also, what are the hottest sectors, how many newly created unicorns were born in 2022, but also some downsides and some, I would say, bad activities that happened to some of the startups that went public this year. For now, we'll just dive into the findings of the reports. Then Google, represented by Fabien here, will share super interesting market trends around mobility, but also the purchases behavior around the cars. And yes, you'll have the opportunity to ask all your questions using the chat section of Livestorm. Keep in mind that right after the webinar, you will be able to download the report on our website. As you may know, this report it was made in partnership with Dealflow, made by the Mobility Club, by VID. VID is the venture capital arm of Mobivia Group. VID is an European early-stage investor in sustainable mobility and autotech. Besides its investment activity, VID operates the Move Lab, which is the main and first French mobility startup accelerator based at Station F in Paris. VID also co-founded the European Startup Prize for Mobility with the EU Parliament and the Boston Consulting Group, and it is the main acceleration and investment program for European sustainable mobility startups. And finally, VID launched the Mobility Club 6 years ago. It's an acceleration platform for mobility corporates and scale-up, and the Mobility Club supports its members in their innovation strategies, but also in their understanding of key market trends in mobility. Felix will present Dealflow afterwards and better than me, but in short, Dealflow is the most comprehensive data intelligence platform for all things related to venture capital innovation in Europe, but also all over the globe. So let's dive into the findings. Felix, the floor is yours. Could you please share some macro trends that happen on the European mobility ecosystem?
All right. Thank you very much, Vincent. It's a total pleasure to be here. I want to thank you all for tuning in, of course. And I'm Felix Ullmer. I'm an innovation analyst at Dealroom.co. And Dealroom is the foremost data provider on startups and tech ecosystems in Europe and around the globe. So adding a little bit to what Vincent already introduced. We work with the world's most prominent investors and government organizations to provide transparency, analysis, and insights on venture capital activity. In short, we have intelligence on startup ecosystems. So today, we have a dense deck for you with a lot of fascinating insights to take home. And we'll obviously show some slides from the report. As many of you will know, 2022 was a tough year for venture funding in Europe and the world. But we will also see that it showed a dynamic and resilient mobility ecosystem. I will take you through the key funding numbers and shed some lights on the macro trends we see in the investment landscapes in European mobility startups. So let's kick off with VC funding. VC funding in mobility reached 11.2 billion in 2022. That is down 19% from a record-breaking 2021. But as we can see, it is still by far the second strongest year to date, outnumbering 2020 by 130%. And this reduction was primarily driven in mega rounds, as you can see in the light red here. 2021 was also driven in large parts by mega rounds. So we had Northvolt, obviously. And 2022 still boasts a few of these remarkable fundraisers. You can see Northvolt again, as usual. But we also have Rimac, NW Storm, Raw Charging, and TT Tech Auto, and Northvolt. And here what we can see is that 4 out of these 6 top rounds are EV related, which showed us something about the maturity of electric mobility and the expansion of funding interests in this segment, especially towards EV charging. We'll do a deep dive into electric mobility soon with Vincent, but first let's zoom into funding by month. So, you guys will all know 2022 was sort of a tale of two halves. So, despite the larger macroeconomic downtrends, the year overall is resilient and still very dynamic in VC funding. But we do also see that the story sort of changes after July. So we have a clear reduction in average funding per month. We have Q4 of 2022 being the weakest since 2019. And this contraction is also primarily due to mega rounds. So we still see these very large rounds in the first half of the year, but not anymore in the second. What is important to note, though, is that the breakout rounds and the early stages are stable and even expanding in some cases. So, evidently, 2022 didn't reach the heights of 2021, but what we can see is that mobility is more resilient than other VC segments. It beats the overall VC benchmark in Europe, and I think that's a really interesting takeaway. So, where we do see a collapse, however, is in SPACs and IPOs. I think this doesn't surprise anyone. 2022 has been a very difficult year for public markets. And that also means that the public market exit window has been frozen throughout the whole year. While 2021 had 22 SPACs and IPOs, we only saw 4 throughout the whole year of 2022. And we've listed a few of those here, but I think what I really want to shed light on right now is that the private markets have been very active still. They're sort of on par with the year prior as well. We see several billion-dollar exits, such as Glovo, which was acquired by Delivery Hero, or Unix Traffic, which was acquired by Atlantia, both at a valuation of above $1 billion. And on the topic of exits, we must obviously also talk about unicorns, everyone's favorite topic. And as Vincent already said, we're not in the same year as 2021, but of course the total number of unicorns has gone up to a total of 44 this year. But the real story lies in unicorn creation. So this is also what we showcase on this slide. And as you can see, from 16 down to 7 this year, which still is the second strongest year to date. So it's still a success story in my eyes. And we do see sort of a reversion to the previous trend line, with 2021 being a real outlier. This is driven by difficulty on public markets, trickling down to new private valuations, and especially for these high-valued companies, this is very important. So far, we've also seen very few down rounds, but in general, rounds in the previous year tended to have more modest valuation targets. And that is because many companies are avoiding to raise unless it's strictly necessary, and the companies that raised in the previous year are often still flush in cash. And as I shortly explained before, the story here really lies in a shifting rationale about public valuations and in consequence also private valuations due to a renewed focus on profitability. More on that soon. So let's talk about a real success story in this year, and that is corporate venture activity. 2022 has been the strongest year ever for CVC. It is up 7% from 2021 and a staggering 190 from an arguably weak 2020. This leads to an increasing share of CVC activity in total funding at 25% this year, up from just 19% the year prior. And this makes mobility one of the highest shares of corporate venture activity in all VC segments in Europe. Corporate investors also took part in many of the hottest rounds this year, including Rimac, Einride, and Volocopter. On this slide, we have a sort of little overview of which corporates invested where, and you can obviously find this one in the report and more data on Dealroom itself. And I want to showcase, or maybe sort of stress here, that it's not just the mobility corporates that are investing in the European mobility startup industry, but it's also a lot of other corporates outside of this mobility industry. And what we can also see is that besides electric mobility, which has been the key success story this year, and which we will also dive into again, the tech giants are also backing the still emerging field of autonomous mobility. And yeah, referring again to the reports. So this is, I think, a very interesting slide to sort of look again with some more time. And to conclude, this first part, European mobility saw its second best year to date. It may be dampened by the larger macroeconomic trends, but it shows a strong funding performance and sustainable interest in the industry, both by insiders and outsiders. And let's now talk to Vincent again, who will tell you more about the biggest trends of 2022, both in segments and geography. There you go, Vincent.
Thank you, Felix. Could you please share with me the click? We just want only remote to share today in the studio. So yeah, really interesting findings. Again, you'll be able to download the study right after the webinar. For myself, I will pause on the SPAC in a minute and also talk about what happened in terms of sectors, but also in terms of geographies. There are a lot of great insights to be shared today. Starting with the SPACs, I mean, the last year we observed a massive value in exits with 81 billion in total value, and it was mainly driven by the SPACs. But today, as Felix explained, the public market were frozen, and this is part of the rationale, the SPAC performance of mobility startups. So let's define SPACs. SPACs stands for Special Purpose Acquisition Companies, and are basically an empty shell that is listed on the stock exchange, whose only purpose is to acquire a private company, hence making it a public one. We've took examples of 4 mobility, European mobility companies that went public through SPAC: Lilium, developing eVTOL solutions; Helbiz, a micromobility operator; Kazoo, operating a marketplace for used car sales; and Arrival, which is, I would say, a new OEM specialized mostly in B2B vehicles. And as you can see, this stock shrunk a lot. And 2021 was kind of crazy when it came to IPOs, because mobility startups leveraged the SPACs as a means to first get cashed very fast, and second, to fund all their ambitions by telling investors that they will reach huge milestones, either in terms of revenue, either in terms of production, depending on the model. But 2022, the party is over. Clearly, these mobility players, they benefited from a momentum to raise huge amounts of money, but investors in 2022 asked for more profitability, which wasn't really the focus of these companies. On top of that, most of these companies announced, I would say, disappointing news, such as Kazoo, that is withdrawing from all over its European markets to focus on the UK, both Arrival and Lilium explaining that they have to delay the production and the delivery of some vehicles. Obviously, this is not something investors like, so they are kind of sanctioned on the public markets. And I would also put emphasis on the fact that last year in the report, we talked about the fact that for the first time ever, micromobility operators went public. We also highlighted all the challenges ahead for these players in managing healthy unit economics and their relationships with the local regulatory bodies. And if we take micromobility in particular, here we must talk about the fact that in Paris, which is often quoted as the micromobility capital in the world, Paris Mayor Anne Hidalgo told that Parisians will get to vote to decide whether they want to keep or not on their streets e-scooters free-floating. This is a massive threat to these operators, on top of the fact that they are still not profitable, and I would say the path to profitability seems very complicated. Sector-wise, well, logistics and delivery again ranks first in terms of funding. Felix talked about global acquisition by Delivery Hero. This segment reached roughly 3 billion euros in terms of funding, but it's worth mentioning made some rounds such as Forto. This is a German-based startup developing SaaS solution for logistics that raised 250 million last year, but also smaller players such as Cabanel, a French one, that raised 10 million. Vehicle production ranks second, in terms of funding, and Felix talked about the CVC performance and how big they were involved in 2022 in terms of funding into mobility startups. Vehicle productions is a sector where corporates are deeply involved. Obviously, Rimac Automobili was already mentioned. It's one of the newly created unicorns. But it's worth mentioning also 15 that raised 40 million last year for its shared bike solution. And recently, 15 won a tender to operate the shared bike service in Marseille in the south of France. But it's also worth to mention Cowboy, the Belgian startup developing a D2C high-end e-bike. Least performing sector compared to 2021, we can see on the slide, is mobility marketplaces. Maybe thanks to Kazoo IPO through a SPAC, now investors have a clear benchmark since this company now must, I would say, share all the financial data. So maybe this sector is not attractive enough because when you have such a benchmark like Kazoo, you are not encouraged into investing into competitors of Kazoo. Let's zoom on the EV, and now it's the interesting part, I would say. Europe loves EVs. EVs represent 61% of total deals in European mobility startups. This is the highest share ever. It's a total amount of 6.9 billion invested only in EV-related startup. It's interesting to see maybe who are the players that raised and benefited from such momentum around the EV by looking at the sectors of EVs. EV charging ranks first in terms of funding, having the biggest growth in terms of funding compared to 2021. And while it's interesting to see that EV charging attracted most of investors' interest, since they've started to fund, I would say, services, vehicle production aspect, but now it's time also to build the infrastructure. In the meantime, the EV battery is down by almost 60% in terms of funding compared to 2021. If we zoom on the early stages deal, where the ranking remains the same, but I would say it's worth mentioning maybe Monta, which is a Danish startup developing a nice platform for both at-home and on-the-go charging solutions for users. And on the EV services side, we can find BIV that raised a seed round last year for its solution, allowing its customer to find the right vehicle, but also the right charging solution at home. And the startup recently raised a round with the EIT Urban Mobility. Another key insight that I love a lot is to say that the EV ecosystem is maturing in Europe. From all over the deals above $100 million, 72% of them were done into EV mobility startup. So I would say, regarding EV, this is not a trend anymore. This segment is here to last, and second, it is well funded to go through 2023, and we don't know what this year will told us about the macroeconomic conditions and so on, but at least these players are well funded for going through. Geography-wise, well, Europe is more resilient than the US, and this is also a good news. While the US in terms of funding drops by 48%, Europe only drops by 19%. Obviously, US remains by far, I would say, remains above Europe in terms of funding, but we can see that the gap is not that big anymore. So maybe it would be too risky to say that Europe is catching up, but at least it's becoming more and more balanced. And at the global level, Europe is the main innovative geography. From all over the early stages deal done in mobility startups, 34% of them are European-based, which is a good news also, and this is not surprising. We talked about the fact that corporates increased their support, EV, which is, I would say, a trendy stuff in the overall mobility, but transportation also in general, and it's happening here, so it favors entrepreneurs to innovate, to create startup, which is a good scene for the future. I would love to say that European founders are more optimistic than in the US, but we'll stick to the data. Another key learning to remind is the fact that every stage, European startups went from 16% of total deals up to 25%. So clearly, there is something happening here in Europe. Talking about the European geographies, well, the top three remain unchanged, except the fact that for the first time UK ranks first. And this is because Sweden and Germany are down by more than 50% in terms of funding. This is massive, and this is the first time that the top three is made like that. It's worth to mention that France is doing quite well, improving its funding by 17%. And Estonia, well, we can say it remains resilient, but we must admit that it's mainly driven by Bolsa funding. And not talking about Austria, that has an exponential growth, but it is because thanks to TD Tech that became a unicorn. So maybe the bottom line for the report, that's it for the insight sharing. I will give the mic to Fabien. He will explain us what happened and what did Google observe in terms of market trends all around the searches. Just for the report, we must keep in mind that corporates increased massively their support. EV is the mega trend in Europe, and at the global level, Europe has a lot of strengths to compete on the global stage. And again, you'll be able to download the study right after the webinar. Enough for me. Fabien, could you please share with us your findings?
Thank you, Vincent. Thanks a lot for having me. I'm super excited to be here with you today. Quick introduction. I'm in charge of the data and the measurement for the automotive and urban mobility industry for Google France. What we want to look at it today, it's all those trends coming from the users. And as you know, at Alphabet, our parent company, mobility is a very important topic. We have very high involvement in this ecosystem through Waymo, through Google X, through Sidewalk Labs, but also through Wing. And if we zoom on Google, you probably know, but we have Google Maps, Android Auto, and all the Google suite around mobility. What we wanted to share with you today is that what we see at Google is that mobility is becoming more and more digital. A key number is that we have 1 billion monthly users on Google Maps. But more important than that, it's this kind of mobility is changing. We have 20 monthly users at Waze, proving that mobility is becoming really an important part of users' life. But this life is changing. Users are expecting different things. That's why now you can see, for example, on Google Maps, you have one trip that is based on the miles and the time, and another one will be based on CO2 consumption. So the users are changing. They're expecting the freedom to move, but they want to do it being more eco-friendly. Another one is that our users are becoming more concerned about the wallets. And that's why now in the US, you can see that for some cars, you have actually the annual energy cost estimate. All of that to say that the users are changing. What we also see, and I think it's a good complement from what Felix was saying and what Vincent was saying, is that Europe, it's kind of behind on a lot of mobility solution. What you can see on the slide is that China is well advanced in almost all the type of mobility. It's good news for our community because it means in Europe, we have a big opportunity to progress on this one. Another important key takeaway from this slide that benchmark is easily accessible from looking at China, for example, and in some instances from the US. Now let's look at our users and what people are looking for in Google. So what we see that people want to go fast. They always want to be quick, and even fastest. So what we see is it's not just being quicker, it's going quicker to home. And what you can see on the slide that we have roughly 20% more queries on fastest route to home than fastest route to work. And you see there is a high seasonality on those queries and those searches. So I think it's a good tip for all the VC and startup in the call today that you have to be very flexible on how you communicate, how you manage your media activation. Now, if we go one level deeper, users are changing a lot. What you can see on the slide, it's from 2004 to 2010, buying a car was kind of the norm. Since 2010, you can see that it's really changing. Then, of course, COVID happened, so renting a car was not the best solution anymore. But if you look at this summer, actually, now renting a car is becoming kind of a very, very high trend. So good news for you all. It means that it will create a lot of opportunities in this space. But if we go one level deeper, it's not everybody that is changing. And you can see on the slide that renting a car is becoming a thing, but it's mostly driven by the Parisian region and Corsica. So of course, it's very high density cities and vacation spots. What we also see the very big trend around micromobility. So if we look at the topic research around electric bicycle, you can see this huge spike since 2015. Now it's completely different in terms of like region. You can see that it's not driven by the Parisian ecosystem. It's mostly driven by second to third tier cities. And it's not just a French thing. It's also a German thing and a UK thing. So we can really say that it's a European trend to change our behavior and our consumption around mobility and micromobility. Now we talked about electric bikes. Let's look at electric cars. It was a big part of your report. So let's look at it from a user point of view. If we look at the interest around electric vehicles, you can see that there is a high correlation with fuel price. The EV queries exploded for the last 3 months at plus 44%. Maybe quick takeaway from this slide, mostly for VC and startups, you can see that fuel price will be a huge driver of what will happen in the next 2 to 5 years. So always a good thing to have that in mind. Now, good news, as Vincent mentioned, Europe is actually quite advanced in EV. We can see in this study, we are by far the most advanced region around this phenomenon. Now, what the users are looking for when they are considering an EV or a plug-in EV, they are looking for mostly about charging and maintenance, which make a lot of sense based on what Vincent was saying around startup. There is a huge need of new infrastructure, new services around charging and maintenance for EV. Another good news is that the users and the buyers are a little bit different than traditional cars. They are taking much more time buying an EV than a traditional fuel car. It's a good news for the startups because it means now you have more time to convince them to buy a new type of car, a new brand, or a new service or a new solution. Because when we look at the data, actually, the reality is we are talking a lot about EV, but if we look at Google numbers, it's only 6% of the searches in France. So 94% of the searches are still non-EV related. Good news because it's an early trend, so it's the right timing to be positioned on this topic. Now, if we deep dive on the electric vehicle one, the searches, you can see that most of it is around battery EV, which again makes a lot of sense from what you said, Felix and Vincent. Another good news for the startups, you can see that 1 in 4 EV searches are non-branded. That means that the electric trend completely reshuffle the cards. Now, as a startup, you have much more chance actually to be recognized and to be found than before. In the typical ICE cars, it was traditionally driven by the big OEMs. It's not so much the case anymore. And we can see when we ask the prospect what kind of brand they are looking for, you can see in gray, that's what they used to look at. In blue, it's what they are looking at. So you can see completely different podium than what we used to see for ICE cars. An interesting one is Hyundai, that is really completely transformed the brand and went straight into the top 5. And maybe one big thing about this one, it's mostly driven by pricing as well. So big caveat from this slide. It's because you see a lot of premium cars. It's normal because of the price sensitivity of the new prospects. If we look at the online car buying path, you can see that, again, Europe is not that advanced here. It means we have still a lot of work to do. I think the startup community will be a huge game changer here. And interestingly, Middle East is super advanced in this sector. So maybe a great source of benchmark. Same thing for Latin America. So we still have a lot to learn from other regions. Good news is that people are changing. They are becoming more open to buying cars online. Now, I'm sure all the startups will love this slide, but we ask why you don't want to go to a dealership anymore. And the results are shocking, like 28%, it's because of the pressure from salesperson. So basically, our sales process are broken. You can see in red, in purple, in orange, it's not working anymore. It's too slow. There is too much administrative task. There is a lack of price transparency, and consumer are kind of like tired of like upsell, cross-sell, and all of this complexity at the dealership. So again, huge opportunity for the startup community to be positioned in a new kind of market. Last slide, it's really about car subscription. We know it's a big thing. We know that a lot of startups are actually going into this market. Strangely enough, Europe is actually quite behind into this one. And at the same time, when we are asking users if they would be open to car subscription, we don't see a huge engagement around this one. Again, it's a mix of different age groups, so that might make sense. We can see different type of responses for the millennials. But when we see what we see on the right of the slide, it's when we look at the driver and barriers, we will maybe start with the barriers because it's so funny. It's like, when you do you want to do a car subscription? And the answer is like, they don't even explain why they don't want car subscription.
At all.
Like, I prefer to own a car. Okay, you don't. That's not an answer. I'm not interested. Okay, thanks for that. And I don't need to swap a car. So you have this big reluctance around car subscription. Now, on the other end, the drivers are quite interested because it's talking about flexibility and it's talking about a new way of actually consuming mobility. So again, we are Google, so we don't have the answers. We are just giving you all the elements. Super interesting topic. It's an open question about car subscription. We are super excited to see what you startup ecosystem will create around this one. And that's exciting. And I think it's time for the Q&A.
Yeah. Thank you, Fabien, for sharing indeed these great market trends. And it's always interesting to see the hard data when it comes to, I would say, behavior behind the purchase and so on. Because obviously most of startups are claiming that property is totally over, but we can see that we can have a mixed argument about that. Self-purchase is still there and it could last. The question is for how long, but let's see. Well, thanks. It's time for taking some of your questions, and I think we already have some of them. We have a question regarding the British Vault crash, and the subtitles are, can gigafactories grow on their own without public subsidies? Felix, I think, do you have a new opinion about that?
Yeah, I think this is obviously a very important question and very interesting right now. Sort of the news of the day that most of us will be thinking about and encountering when we talk about mobility in this late January. So maybe to sort of contextualize this a little bit, British Vault, very important player also in the last year, reached more than £800 million valuation and is now crashing, and sort of the last bailout package had it valued at just over £30 million. So obviously this makes a lot of people very scared. It makes a lot of people very scared that the British government backed out of their proposed 100 million backing. So I think the important story here is that the private markets can't do it alone. So what we showcase here, we showcase a lot of private market engagement. We showcase that the interest is there, but for these large infrastructure projects, they can't go the path alone. So to have these gigafactories, you see them with Northvolt in Sweden working out. Mm-hmm. You need a partnership between private funding sources, between private companies, and you need political will mm-hmm. and political support by governments. That can be the UK, but also looking at the bigger picture of energy and mobility independence of Europe in the future. It is important that we have these players at home, that we have these players in Europe and in the UK and the European market. And I think that is sort of the key takeaway here, that yes, there is funding interest, there is money for this, there is an interest in this field, but governments must step up and bring political will, bring funding, and bring partnerships with the private markets here.
Yeah, that's true. And if I may add, political sponsorship is really important, because unlike private players, they are not, I would say, motivated by the return on investment on that particular project they are funding, but their will is more to create a new economy, a new ecosystem, yes. that they know that in the long run that will help them to compete with other geographies and also help them to achieve, I would say, their goals. And we must talk about the good effects also on the EV industry and the gigafactories on the overall gas emissions. We have a question about the car subscription, and Fabien, I will ask it to you. Basically, what is car subscription?
Well, that's a very good question. And I think the answer is like very multiple. I think you have different flavor in the car subscription. I think the Chinese are actually quite advanced, because it's heavy in China already, where actually you can register, you pay a monthly fee or yearly fee. You get access either to one car or to multiple cars. And I think Porsche did the introduction with the Porsche Passport a couple of years ago. And the value proposition was really, I can drive a 911 during the weekend and I get a Cayenne, during the week when I need more space. Very interesting value proposition. The price point was quite high, of course, because it was high-end vehicles. A lot of OEMs did try this car subscription. I think Seat tried that. What's very interesting and complicated is how do you manage? Because of course, everybody wants a 911 during the weekend. Everybody wants a big SUV during the week or during, mm-hmm. like very high or long trips. Mm-hmm. So it's this complexity of managing the fleet and the type of cars makes the price point quite high. And ask a big question about sustainability as well. Car subscription could be a solution, but we don't know how really we want to position that. So bottom line, car subscription, it's you pay a monthly fee, you either get a car, different type of car, and you have the flexibility of stopping or starting your subscription like a phone. Mm-hmm. And that will be the big difference comparing to like a loan or a lease type of contract.
Okay. Thank you, Fabien. We have a question asking, how could you explain the dynamism of a European startup? Well, the answer is complex, but I would say in a nutshell, this is because the ecosystem in general is here to support innovation when it comes to mobility. As we saw in the study, corporates invested all-time high into European mobility startups. What they can provide beyond financing the startups is also industrial assets, if relevant, knowledge and expertise around the market that favors the emergence of the startups. This is the first thing. Second, we talked about government bodies. Also, the European Union is pushing very hard towards the emergence of innovative players. We know all the people from EIT, Urban Mobility, EIT, Energy, and you have, in short, a dedicated mobility body from the EU for each type of transportation. And finally, I would say overall, the European startup ecosystem, and not just in mobility, is catching up with the other geographies. You have great success stories from big companies. In France, we can think about BlaBlaCar, but in Germany, we have Flixbus, and you have such alumni that are going out and building great startups with all the know-how and the expertise of funding and company. And last but not least, all the VCs now learn well about mobility, and they know how to find and spot the right project. So if we mix all of these elements and you put it into a shaker, at the end, what you have is a booming ecosystem. And this is also what the European Startup Prize for Mobility tries to achieve. It's an initiative that is trying to gather both EU decision makers, corporates, and innovative players in order to favor the emergence also of new mobility champions. And I would mention Einride, that is a former winner of the European Startup Prize for Mobility, which is now a unicorn. We still have some question, and Fabien, I will continue to ask to you because we have I would say the second part of the question behind the subscription. What is the current trend of car subscription models in Europe from an OEM point of view, and how is it impacting the integration and utilization of all the telematics and the IoT? So in short, what's the position of OEMs for subscription in Europe, and what are the tech tools that are used for that?
Yeah, so maybe the first question, which is quite interesting, because if you are looking at the trend, we have a big chip shortage in the automotive industry, so we don't have enough volume. So right before COVID, it was a big trend because actually we had too much volume. So the idea was to figure out how we can sell more cars, or at least use all those cars, like sitting on a parking lot. Now, completely different. Most of the OEM, the French one on top of them, the German one, of course, they don't produce enough cars. And they cannot actually supply enough cars to the market right now. So there is no incentive actually to use car subscription to sell more cars because they cannot produce enough cars. So I would say the car subscription is in pause, not for the good reasons, but for a purely supply chain reason. That's the first one. Second question is, so I love this question. We are in full tech right now, and that's amazing. So the data actually that we are collecting from the car, that's one big reason the OEMs are moving to heavy software data-driven cars, because they have much more granular data about the car, about the trips, about the use. And I think Tesla did a lot of announcement around that. Now they have the same problem about supply chain, so they are less vocal about it. But the value proposition of Elon Musk was like, you are driving your Tesla like 1% of the time. So 99% of the time we can use this car actually to do ride sharing, taxi solution. And the data will do that. So we will have enough information to deploy the cars where there is high demand. We can take those cars out of the low demand. So I think it will create a lot of mobility solution that we could not unlock before. And actually, it's actually giving the solution for the ownership of a car, because the big trend now, it's the ownership will stay inside the OEM. They will keep the ownership of the car. They will manage the car, and we will just consume the trip. And actually, I'm glad we have this discussion, because I will actually give back the answer to the VC and all the funding actors, because we have a big change for the OEMs, where the model was to sell a car and you cash out actually the money. Yeah. Now you produce, you get the costs, you keep ownership of the car, and you have very small amounts of money going in your way. Yeah. So how do we shift, the financial model of an OEM, and how we make that happening?
Yeah. Well, we have a question regarding all the investment into the EV charging. Do we expect that the pace in investment in the EV charging will remain the same, and if we must expect some consolidation? For the first part of the question, it depends, because what we observe is that OEMs also are trying to get themselves into the EV solutions. They are developing their own. We have energy utilities companies, Shell that bought EV charging startup to operate its own network. We all know also Tesla developing its own solution. Maybe the EV charging, and I don't have the crystal ball to say that, but could continue, just because when we look at the constraints in terms of valuations, infrastructure-based projects are more easy to understand. I would say that the price could be seen as more fair compared to SaaS solution going to investors saying my valuation is 10 times the projected revenue in 10 years. So this is why we can expect, at least for the coming months, continuous funding. And I would say also that the funding activity in the EV charging startups also will depend on the milestones these players will be able to achieve, because every time you're going to see an investor, you present a business plan with targeted objectives, and if you don't meet your objective, you'll not be able to raise further amounts of money, especially in a context where I would say the money is kind of drying for innovation and is more targeted toward established players. And Felix, also happy to have your thought about that, but regarding the consolidation, I would say at the moment, until I would say the user base is not that big for new innovative players, maybe these guys won't be interesting enough for corporates to be bought. But
yeah, I mean, I think you already said a lot, and sort of the key takeaways are in what Vincent said, but maybe just to add a little bit something here, and to sort of add to the importance of EV charging, and sort of also why we were very excited to see EV mobility and charging in particular pick up steam this year, is because let's just put it this way: there's a lot of potential and a lot of need for better EV charging infrastructure in Europe, and this is not going to be a thing of the next coming months. It's not even going to be a thing of the next year. This is something that will play out over the next years, 5 to 10 years. And it is fascinating and very encouraging to see that we are sort of starting to pick up steam on that. It's a marathon, not a sprint. But as Vincent said, we can't tell you what the future will look like. But let's just say we're in a good position right now to have this infrastructure be built up in the coming years and have a good value proposition and long-term revenue potential for this industry to really flourish in the coming years.
Okay. We have quite a difficult questions asking if stating that we are on the rare earth, lithium, and other materials that are mandatory to build state-of-art, I would say, battery electric vehicles. Should we expect that it will help or refrain, I would say, the development of EV mobility? Well, this is a hard question. I'm not an expert, obviously, in mining and so on, but what we observe from a startup point of view is that there are lots of patents for battery electric vehicles on the battery side, developing, I would say, innovative technology and cells that are not relying, I would say, on rare earths. This is a good thing, but we're talking about deep tech, and what's special with deep tech is maybe the technology is here, but business case and business model around it must be found. So there must be a match between the tech, which is, I would say, very based on research and so on, and the reality. Most of great innovations that are not relying on the rare earths for battery maybe won't find a go-to-market because you have not enough investors around it, or maybe OEMs are not interested into integrating the batteries. But bottom line, it could be I would say a threat to the development of EVs in terms of, because just it produces lots of gas emissions. It's true, but in the meantime, entrepreneurs are tackling this issue in order to find solutions. So let's see for that.
You know, if I may on this one, that's a good one, but I think I would not say it's a threat, because I think it will just force us to manage the raw material and the battery differently. And I think the concept of circularity is getting a lot of traction. We see with Renault, who announced kind of a business unit dedicated to circularity. And I think we will just change our way. Instead of a linear model for battery, we'll use a circular approach on like producing remanufacturing. And I think that the objective, and I'm sure near like 2030, we should be able actually to reuse most of the component from old batteries and put that into new batteries, creating a much more like eco-friendly model around the mobility. So I think for me, it's more like it's exciting. We need to change our way of thinking, but I would not see that at the blocking point.
No.
I'd be wrong.
And some startups are already tackling this issue from a circular economy point of view.
Yeah.
And we can mention Novus, for instance, which is a Dutch-based startup that is specialized into batteries repairs for micromobility. So what they do, they extend at the end the first life of the batteries. They are able to repair up to 70% of all the batteries they collect for micromobility. Obviously, the next step will be to get into automotive. But yes, let's see. And there is something happening on the circular economy side. Felix, a question for you.
Yes.
If we look at the investment market in startups in general, how mobility is positioning regarding other sectors?
Yeah, so I already talked about this a little bit earlier in my presentation. So what we looked at is sort of different sectors in European VC, and what we do at Dealroom is we have different industry classifications, and then we look at the general VC benchmark, and we look at how mobility is doing in comparison to other industries. And maybe for some context, what's not surprising here is that energy obviously was performing very well this year for very obvious reasons. But that mobility has actually performed better, or at least sort of reduced less than other VC segments. So the benchmark is somewhere around minus 31 to minus 33%. And as we can see, as we already saw earlier, transportation and the mobility industry has only decreased by 19%. So it's beating the European VC benchmark in that sense. So this is not necessarily amazing news, but what it means is that mobility is more resilient. And I think that's also sort of what I wanted to stress here, that we have an industry that is less prone to a lot of volatility, is less prone to a lot of shocks, like we, for example, see more in fintech and other more volatile industries. And I think those are the key takeaways when it comes to the comparative performance of transportation in European VC at large.
Okay. All right, thank you. Maybe a last question. I'm looking at the clock. For you, Fabien, I'm sure there are lots of startups watching this webinar. What can Google do for the early stage startups in terms of support? Have you developed any services for early stage startups?
So right now, I think the first answer would be to look at Google for Startups. I think that's probably the best program to get access to. I think we are thinking about doing something with you guys to have like an access through via ID and Mobility Club and Station F to the Google for Startups program. So I would say that's really kind of like the one thing. I think the other thing is like from an infrastructure point of view to look, there is a similar program. So it's Google Cloud for startups. We talked about data. We know that actually the winners of tomorrow will be heavy data driven. So I think there is different programs where you can have like specific access or deals for startups. So I would strongly recommend looking at that. So yeah, that's kind of the two programs we are offering that I'm thinking of.
Well, that's cool. That's enough materials to look at for early stage startups. And that's a wrap. That's it. Thank you all for attending this webinar. Thank you, Felix. Thank you, Fabien. It was a pleasure. I hope you all enjoyed learning more about what happened in the European mobility ecosystem, but also all about the behavioral trends around the purchase and all the queries around mobility. Again, now you can download the report on our website. I'm sure a link will be shared in the chat. So thanks again for attending this webinar, and I wish you all a nice day.